Liquidity is the heartbeat of the markets. As traders, we live and breathe its movements. Knowing how it flows can be the difference between profit and loss. Let's break it down. Liquidity is all about execution. It's the ability to get in or out of a trade with minimal slippage. Think of it as the grease that keeps the market's gears turning. The deeper the liquidity, the tighter the spreads, and the more efficiently you can execute. Liquidity has two faces: market liquidity and funding liquidity. Market liquidity is what we deal with daily, how easily assets trade without moving the price. Funding liquidity? That's the trader's ability to access capital. If you're running tight on margin or borrowing costs spike, that's your funding liquidity being tested. Liquidity flows where the action is. Central banks pump liquidity in through rate cuts or asset purchases, while institutions and traders move it around as they chase opportunities. As a trader, you've got to read these flows. It's like tracking the tide before setting sail. Liquidity reacts to catalysts. Interest rates, geopolitical events, earnings reports, you name it. Low rates and calm markets are like a full tank for liquidity. But panic, uncertainty, or tightening monetary policy? That's when liquidity dries up and spreads widen. For traders, liquidity is everything. It dictates how quickly you can act, the cost of entering and exiting positions, and how much risk you can take. Whether you're scalping on a 1-minute chart or managing a portfolio, liquidity shapes your strategy. When liquidity dries up, chaos follows. Prices gap, volatility spikes, and getting out of a trade becomes a nightmare. We saw it during the 2008 crash and even in flash crashes since. As traders, managing liquidity risk is non-negotiable. Navigating liquidity takes skill. Watch the order book, track volume, and understand the macro backdrop. Diversify your strategies and always plan your exits. Remember, liquidity isn't just about what's there, it's about what's coming next. Liquidity is the trader's compass. Master it, and you'll stay ahead of the market's twists and turns.